Subramanian with us from Sundaram Mutual Fund, Managing Director. Quick 3 questions from him about the markets and how the market will behave in future. Over to you, sir. I want to understand what should my investor do in such a scenario. Today the market is all-time high and elections are approaching.
So I think that one of the key things is that with the election results that happened on the state election results, so it's been a huge positive for a lot of foreign investors in their outlook for India. So I think that though the markets already are at a lifetime high, I do expect incremental flows from foreigners to come into India. So I think that large caps will get buying support in this period. So I would recommend to investors to take a large cap oriented portfolio, which could be either a large and mid cap or a flexi cap in their allocation. Or if they have also felt that they have made a lot of money, it's also a good time to move into moderate risk products like hybrids and multi-assets. Because the other thing which is looking at is that the Fed is going through a 250 basis points rate cut over the next 3 years. And generally in the past, rate cuts have been positive for gold. So while gold has given a good return last year, in the previous times you see, for 3 continuous years also gold has given good return. Plus, gold also gives you a protection if anything goes slightly out of wrong in the equity market. So I think multi-assets are a good allocation because multi-asset funds have a large cap orientation in the equity part.
Correct.
So I would say generally you made good money in small caps. I would say at the short end of the curve, don't put incremental money into small cap. There's no need to rush into profit booking, but incremental allocation to large caps will be good because you also make decent returns and you get protection in the event of any untoward correction. So I would suggest a large cap oriented portfolio, not pure large cap funds, but a flexi cap or a large cap.
And now which is your favorite sector allocation in such a scenario for a period of 2 to 3 years?
So I think that for me the 2 top picks on sectors would be consumption and banking. The reason for that in the recent past, capital allocation has gone excessively to infra. But I see that the infra capex cycle is not happening as with the speed it was expected. Only government capex is happening. So at some point of time, I expect a reallocation of money with profit booking and infra. And I think consumption hasn't got its deserved share of money. And over the next 6 months, I think government spending and opposition party spending in an election will lead to a lot of consumption boost. Second is banks have not had a good run recently. But there is nothing wrong with the quality of our banks. NPAs are coming down and everything. Just a readjustment is happening. So I believe that the banks are a good bet at this point because they have not grown and so they are a good buy. So I think a reallocation to banking and financial services and to consumption would be 2 smart decisions at this point in time in the next 2 to 3 years.
So why asset allocation today?
Why asset allocation today is because if you see over the long run, for example, we have chosen gold as the primary third component of our multi-asset fund. And if you see over a history, right, over 18-year history, half of the time gold has beaten equity because equity is volatile. Gold is also volatile, but it's volatile at different times than equity. So when equity tends to correct, gold tends to do well. So I think given a journey over a period of time, asset allocation, one is to do on your own. But when you do a separate gold or a separate debt allocation and a separate equity, when equity falls, you don't think that, oh, I got made money in gold. You only look at the loss in the equity.
Correct.
So human beings are by nature driven by that fear and greed psychosis. So I would say that if you have it in one portfolio, then you have a pure equity fund also in your portfolio, you have a multi-asset. You can see that the multi-asset delivers when equity is not doing well. And very often, because gold does well along with equity. Like the year just gone by, both equity and gold have done well. So the beauty with gold, and that's why I like to use the word shock absorber for gold, like a vehicle shock absorber. It protects you in the down, but also helps you in the up. So I think that gold as an addition to an equity investor is a very good addition to an equity investor portfolio because it doesn't take away that much of the return, but gives you very good protection against risk. For example, multi-asset portfolios with gold in it over 3 years have never lost money, even if the markets have corrected badly. So I think that multi-asset allocation is a good place to park profits that you've already made to protect them. And plus, for a moderate investor, I think over the long term, multi-asset funds have delivered good, healthy inflation and fixed deposit beating returns. If you take 11 to 12% return from a hybrid category, if you take away a 10% long-term capital gains tax because it's an equity-oriented fund, you still make double-digit returns. Whereas in an FD with 8% from a bank FD, you end up making only 5.6% post-tax. So you're almost getting double the return with a multi-asset fund.
Right.
So I think multi-asset funds are an important addition to equity investors and are a good class for moderate investors to look at long-term wealth creation with less risk.
Thank you so much. Thank you, sir, for your time. And let's reallocate your funds and let's put a lot of money into multi-asset allocation today and realign your portfolio in such a scenario. Thank you so much for talking with
All the
private
best.
bankers. Thank you so much.
All the best to your investors for a
Thank you,
good
sir.
investing
Thank you,
choice.
sir.
Thank you.